What's going on, everyone? It's Blandon here from mortgagehq. Now, interest rate has actually doubled since last year, but recently several main banks have actually decided to drop their fixed interest rate on the 2 years by 0.3 to 0.35%, and it's now just sitting around at that 5.5% mark. But is this a sign that the interest rate has finally peaked? In this video, we're going to explore why interest rates have dropped, what to consider if you're looking at properties right now, and how you should structure your current mortgage if you are in that situation. Now, if you do learn something, don't forget to support the channel by smashing that like button for the YouTube algorithm. So why have interest rates gone up? The long story short is that the US has very low confidence in their economy because everyone can see the pending recession. Now, interest rate is actually a tool used by the central banks to steer the economy's growth, and most OECD countries aim to have a healthy inflation of around 1 to 2%. They want prices to go up, but just not too much. Now, since most economies are basically built on long-term debt, they lend out money on assets like housing and expect people to earn a steady paycheck to pay that mortgage over the long term. We've seen a massive boom in the last 2 years in the property market, but recently the prices don't look too good. In New Zealand, we are seeing the biggest price drop in the last 13 years. Barfoot & Thompson recently announced that they have a 45% drop in sales when compared to last year. The housing stock on the market is historically high, so the market is already feeling the heat from the rising interest rates. And frankly speaking, it doesn't look like it can handle a lot more, because if rates were to rise another 1 to 2%, it's like asking the people that have bought a property in the last 18 months to walk on the plank. Because when their repayments come off the fixed rate, it will have effectively increased by 45%. $1 million is going to cost around $900 on last year's rates, and now it's going to look more like $1,300 a week. Now, if you mix that in with the current rising living costs by another 10%, it will be very hard for many families to sustain. Second point though, when there are uncertainty, there are opportunities. Now, if you're in the market and you're in a position where you've got the deposit, you've got the serviceability, I don't think there will be a better time to buy than now. Prices have come down significantly, and it's not uncommon to see properties selling $300,000 to $400,000 less than their evaluation. It's basically the value that the banks use, and it's based on the recent sales in that particular area. And so if you're buying in this market, I definitely urge you to think twice before you just buy the nice home, because if you make the smart play and buy something that's going to have long-term value, it's going to make a massive difference in the next boom. The equity gain is going to allow you to build your wealth significantly faster. And if you want to learn more on what kind of properties have good long-term value, this channel is for you. Definitely stay tuned and subscribe. Now, if you're thinking about fixing your interest rates or sort of structuring your mortgage, you really want to make sure you have a lot more certainty around your cash flow. If you put your whole mortgage on just one particular rate, you could be in a massive disadvantage here. Now, there's always a possibility that the rate stays around the same, but if you just fix short term, you could be caught off guard. And if you put all your mortgage on the long-term rate, you could be stuck on a much higher rate for a long time as well. So in this current market, it's best to utilize interest rate averaging, essentially fixing your loan over 1, 2, 3 years, 3, 4, 5 years. This will give you the best long-term average on the interest rate, giving you a very good cash flow projection as well, and a dollar cost averaging on your costing. Now, if you want to talk to someone about your borrowing power, your properties, or just your mortgage in general, mortgagehq is the best place to go. You can check out mhq.co.nz and just book in a 10-minute call. Someone will be in touch and schedule you in with an advisor, prepare you for the meeting, and sort of explore those options with you. What is the one big challenge right now you see with the current market? Is it repayments or is it property prices? Love to hear from you in the comments below, and until next time, I'll see you guys in the next video.
My favorite thing about the workshop is how simple it is. So language is really easy to understand, so anyone like with no property knowledge can understand what's going on.